Hey, what is up everyone, it's David here. In this video, I want to give you a quick update on the stock market, crypto, and also a follow-up on the EV battery stocks because they recently went through a massive spike. These are just my own observations and I wanted to keep you posted so that no one gets caught off guard. As usual, if you do learn something new, consider gently smacking that like button right there, and that will mean the world to me. And no, this video is not financial advice or recommendation to do anything. It's just general information to hopefully brighten up your day a little bit. So, without further ado, let's go! So this video is going to be broken into three main parts. First, I want to do a follow-up on the EV battery stocks that basically went to the moon. And then I want to talk about the stock market as a whole, especially what to look out for. And then lastly, there's a few comments around Bitcoin I want to make. And there's a very, very useful resource when it comes to learning more about the crypto sell-off that if you're interested, that's a great piece of resource to read. Now, all of the timestamps are in the description box below, so feel free to help yourself. So in my 2 undervalued dividend stocks in a crazy market video, I mentioned that this article from Reuters mentioned that President Biden was looking abroad for electric vehicle materials. Under the proposed infrastructure plan, part of the thinking, at least according to the sources, is that it's not hard to go dig a hole. But what is hard is getting the stuff out and getting it to processing facilities. Their idea is to onshore some of the processing job on US soil. And under the approach, US will rely on Canada, Australia, and Brazil. And because our country was mentioned, a lot of the EV stocks or battery related stocks popped. Now you can see something like the Novonix on the day popped off for about 10% before briefly dropping, well, still close to 10%. And then Vulcan Energy on Thursday went off for about 5%. And then EMH also popped off. EMH is a lithium company over in Europe and it's listed in Australia currently. They popped off for around 6%, 7%. And of course, Talga also popped off for approximately 8%. And when we look at the charts again for the EV battery stocks, you can see that when the market opened again, it corrected. Now, it's still relatively elevated compared to where things are at before, but it just lacks substance. When we look at EMH, it basically came back down to earth and some more, around 8%, and also Vulcan Energy as well. And it's the exact same thing for Novonix. You can see that Novonix has dropped around, well, close to 5%, basically most of the gains that where it popped off over here. Essentially, what I'm trying to say is that in the short term, the stocks are a popularity contest. In the long term, it's a weighing machine. Unless the fundamentals have changed, either for the good or for the bad, I don't really want to make any decisions based on news, right? If the fundamentals of the company have gone better, great. If it has gone worse, then I got to make a choice on whether I want to keep it. Now, as it stands, I still very, very much believe in my thinking and my thesis behind the companies I hold in my portfolio, especially around EV materials. So I am happily going to hold them for a very long time. The next thing I want to talk about is a broader stock market update and what to look out for. So when it comes to a broader stock market update, I want to talk about macro first so that I can put things in perspective. This is a graph of US personal income between 2016 to 2021. You can see that in April, there was a spike in personal income. Spike in Jan, spike in March this year as well. Now, I think that these spikes are largely caused by the massive stimulus checks. But the stimulus checks wear off eventually, and they go back down to the normal personal income level. And as you can see, more stimulus troughs, more stimulus it troughs. So what I'm trying to get at is that as the stimulus effect wear off, majority of people's personal income will likely be dedicated towards essentials. So I'm talking about food, I'm talking about transport, I'm talking about healthcare. The excess amount of money people will spend on speculative type assets will be slower, smaller. So basically, I'm saying that there'll be less money chasing after these speculative type assets. On top of that, inflation is running pretty hot and interest rate is still very low. So if inflation does get out of hand, one of the core tools that central banks have to combat inflation is to raise interest rates. And when you raise interest rates, that's not good for growth stocks. At the same time, it's not all bad for growth stocks if interest rates go up. At the end of the day, it's the growth stocks with very little earnings, very little cash flow, and very, very dependent on investors for more capital are the ones that's going to get wrecked, essentially. But the growth stocks with a lot of cash flow, a great business, and a lot of pricing power, like for example, Apple, Facebook, Google, even Salesforce, those wouldn't really be impacted all that much. So what I'm trying to say is that inflation is running pretty hot, and the probability of interest rate going up is becoming higher. So I'm extra careful with growth stocks with no earnings, burning a lot of money, not generating any cash flow. And recently I've been adding a lot more high quality value companies that's actually growing, generating tons of cash flow in the healthcare space in my portfolio. So if you want a portfolio update, I recently just did an update. I'll leave a link in the description box below to that video. The last thing I want to talk about is Bitcoin. I know that for many of you, you much prefer to have gold or silver bars underneath your mattress and call it a day. But my incentive is very much a rule-based monetary policy instead of print money to the moon type policy in the governments. Not to mention, we are going to witness whether a crypto asset can be a store of value. So this is super interesting to me. That's why I am interested. And in my previous videos, I mentioned that for people who came in between 41,000 to 64,000, these are going to be latecomers. And as Bitcoin price corrects below 200-day EMA and the support line right here, it's very likely that as the price shoot up again, gets closer to resistance, they are going to sell out. So these are going to be essentially the selling pressure as the price goes up to this point right here. This correction has only been a couple weeks. If we take a trip down memory lanes, we can see that a correction the size of around 50% takes around 2 months to recover from. Ultimately, I have confirmation bias, and I can admit that. And in my previous videos, I talked about the realized HODL ratio, and this is really a proportion of short-term investors versus long-term investors taking into account market age. When the proportion of short-term investors far outweigh the long-term investors, basically the red line moving into the pink zone right here, that was when the market really topped. It was the short-term investors really driving up the price really high to unsustainable levels before it just came crashing down. This is where we are at currently. That's one of the reasons why I don't believe the bull run is completely over. But hey, I could be an absolute idiot and completely wrong. It could take ages for this correction to end before it could go back up, or it might never go back up. But I am absolutely ready for a masterclass in volatility. There are a few more things about Bitcoin that I think is really worthwhile knowing, and one of them is the Grayscale Bitcoin Investment Trust buying. And they are actually one of the biggest buyers of Bitcoin middle of 2020 and probably before, towards the early 2021. One of the main reasons they could do that is that people were willing to invest in the Grayscale Bitcoin Investment Trust, even though they are trading at a premium to net asset value. So think of it like an ETF where investors were willing to pay for a premium on top of the net asset value for access to Grayscale Bitcoin Investment Trust. So as long as GBTC was trading at a premium to net asset value, GBTC can actually use that money to buy more Bitcoin. So they were really big buyers. As you can see, towards the early 2021, around March 2021, they moved into a discount to net asset value territory, which really means that you can see that they are becoming a net seller of Bitcoin over time. And until that GBTC can go back to a premium territory, they will more than likely be a net seller instead of a net buyer. So more selling pressure. And if you are really interested to learn about the fundamentals around the sell-off, this article from Glassnodes is a gem, absolute gem. It's a really detailed documentation around who was selling, who was buying, what exactly happened. I'll leave a link in the description box below for any of you who are interested. Thank you so much for hanging out with me all the way to the end. If you did learn something new, consider gently smacking the like button right there. Subscribe to my channel, click onto the bell so that when I release future videos, I can let you know. If you're still bored, I left a video on the screen that I think it's incredible to watch next. And as usual, Otto will always do the honors, and I'm gonna see you very, very soon.